We believe this is the beginning of the age of AI. A young researcher designed a piece of software that was able to learn by itself using an algorithm called deep learning.
After 12 years working on artificial intelligence, something gigantic happened. The generative AI era is upon us. To learn the representation of almost anything with structure, how to represent language, audio, video, generate almost anything you like.
Revealing 100 million users on ChatGPT. It is impacting virtually everything we do.
Demand is such that they can probably name any price that they want.
This is a company that you gotta own.
It's set to open at a record high this morning after reporting that blowout quarter.
So it's about $240 a share.
That's like down almost 50% from here.
NVIDIA today is priced for a good decade, not just a good year.
There looks to be a bubble.
The AI revolution is here. It's clear that artificial intelligence will increase productivity massively over the long term. However, we are still in the early stages when it comes to monetizing these new advancements. It's a really exciting time, but the future is unknown. From an economic standpoint, the first beneficiaries of the AI boom are the semiconductor companies, specifically NVIDIA, which dominates the AI chip market. They are far and away the winner. It is not even close. Their parallel computing model, originally designed for gaming graphics, is the exact way to run these large generative AI models. As of Q2 2023, NVIDIA has 87% GPU market share. At the high end and cutting edge advancements, NVIDIA might as well have a monopoly. On top of this, the company has a massive developer ecosystem, which creates a sort of momentum and competitive advantage. Since 2006, NVIDIA has built the CUDA developer environment, allowing developers to optimize their GPU performance, create applications, and much more. Developers use NVIDIA, build for NVIDIA, and want to keep using NVIDIA. It's become the default option. They have the first mover advantage. This moment has been over a decade in the making. Many analysts refer to artificial intelligence as the modern day gold rush. Well, who reliably makes money in a gold rush? Those who sell picks and shovels. In this case, GPUs are those picks and shovels. Demand is off the charts. This is being led by major cloud service providers like AWS, Microsoft Azure, and Google Cloud. They are spending billions to make sure they have enough NVIDIA GPUs and infrastructure to meet existing and future demand for AI training and applications. Beyond cloud providers, there are countless companies who want GPUs for their own internal infrastructure. For example, Tesla has been using NVIDIA along with their internally developed Dojo chips to train self-driving models. With the rise of generative AI, countless large companies are looking to upgrade their data centers to prepare for AI applications. Venture capital-backed startups are pouring billions of dollars into buying GPUs with the hope of training the next great model to compete with OpenAI. Even sovereign wealth funds and governments are buying GPUs to train the models. The amount of money pouring into AI is insane. This past month, NVIDIA released its Q2 earnings, and the results were staggering. It was quite possibly the most impressive earnings release in decades. NVIDIA generated $13.51 billion in Q2 revenue. That is up 88% from 2023 Q1 and up over 101% year over year. Data center revenue in Q2 was $10.32 billion, up 141% from Q1. This is a 171% increase year over year. On top of this, NVIDIA's gross margin has grown to 70.1%. Their customers seem willing to pay any price to get these chips. NVIDIA is a money printing machine right now. In Q2, they generate over $6 billion in free cash flow. For context, that is almost doubled their 2022 annual free cash flow all in one quarter. As if this wasn't good enough, NVIDIA's management stated on their latest earnings call they expect demand to remain strong and continue to grow for at least the foreseeable quarters. In Q3, they estimate the company will generate $16 billion in revenue with gross margins between 71.5% and 72.5%. To further emphasize this positive outlook, the company approved a $25 billion share repurchase program. In Q2, they returned $3.38 billion to shareholders by repurchasing 7.5 million NVIDIA shares. All this positive earnings news sent NVIDIA's stock price rocketing up in 2022. The price has increased over 190% year to date, with a peak of being up 244%. This values the company at over $1 trillion. For context, that is the sixth most valuable company in the world. If we expect NVIDIA to replicate Q2 earnings over the following fiscal year, then that would give it about about $10 in earnings per share. That would mean Nvidia stock is trading at 40 times expected annual earnings. At this valuation, there are two questions that need to be answered. Is the recent level of earnings performance actually sustainable? And can Nvidia continue to grow earnings at a high rate from here? For Nvidia's valuation to make sense and provide room for future returns, then the answer to both those questions must be yes. If not, then Nvidia stock is a bubble waiting to pop. In today's video, I'm going to explore the answers to these questions. This will include a deeper look into Nvidia's business, attempts to project out the AI market, and historical examples of companies involved in technological revolutions. In addition to my research, I'll provide insights from various analysts. So is Nvidia stock a bubble? Let's roll the intro.
But how do I make money?
It's not what a businessman thinks about in buying businesses. So why think about it when buying stocks? Because stocks are just pieces of businesses.
But guess who's still on the air? Me.
My name is Zach, this is Dividend Data, and you should leave a like and subscribe if you enjoyed the video. Throughout, I'll be using my stock research tool, which is available at dividenddata.com. This aims to provide all the necessary data to make better investment decisions and avoid money-losing stocks. If the software helps you identify just one slightly better stock, then it pays for itself. If you want to try out dividenddata.com, there is now a 14-day free trial. Link in the description and pinned comment. First, let's take a deeper look into the history and business of Nvidia. Most of us know the company from their flagship gaming graphics cards. This was the pillar of the company since its founding in 1993. To create the best possible 3D graphics for gaming, there needed to be an innovation in computer processors. Traditionally, CPUs are the core of the computer. This is still true today for the vast majority of use cases. CPUs are general-purpose processors that can handle almost any type of calculation. They sequentially perform tasks at a very fast speed, so they execute one task followed by the other and the next, etc. Nvidia played a major role in developing a new type of processor, the GPU. A GPU works by using parallel processing to compute tasks simultaneously. They divide a task into thousands of smaller subtasks and process them concurrently instead of sequentially. This parallel computing model is far more efficient when it comes to graphics processing. For example, in a game, you need to independently calculate the location and value of thousands and sometimes millions of pixels at a rate of 30 to 60 times a second. These calculations are far more efficient if they are calculated simultaneously rather than one by one. We're talking about an improvement of several orders of magnitude compared to CPUs. Nvidia was a major innovator and helped bring the GPU to the masses. Gaming graphics cards became their core business. This was a great product segment, but not a path to create a trillion-dollar company like it is today. The gaming market was volatile, and there were many years that they faced stiff competition from AMD's GPU. The margins of this era for Nvidia were far from where they are today. Gross margins were in the 30 to 40% range until 2012. In that time, earnings per share fluctuated massively with practically no growth for a decade. Likewise, the stock price was going nowhere for investors outside of the occasional peak and crash. Nvidia could certainly build a successful business within gaming, but they needed to find more GPU use cases if they were ever going to see massive growth. In 2012, that next market would start to become clear when AlexNet shocked the computer science community. The ImageNet Large-Scale Visual Recognition Challenge was hosted to see who could create a model that would best label the image with accuracy. This is in a set of over 15 million labeled images belonging to roughly 22,000 categories. Alex Krizhevsky took a novel approach to this problem by using convolutional neural networks. Although neural nets had been worked on since the mid-20th century, they were considered far too computationally intensive for most use cases, especially large datasets like ImageNet. It would take an unreasonable amount of time to train these models on a traditional CPU. However, Alex used NVIDIA's recent GPUs and optimized it with their CUDA developer tools. That network took between 5 and 6 days to train on 2 GTX 580 3GB GPUs. In the end, the network achieved an error rate of 15.3%, which was 10.8% lower than the runner-up solution. It beat the algorithms algorithms designed specifically for image recognition by top researchers. This was a massive improvement and a far simpler, more generalized solution. The results showed that convolutional neural networks trained on GPUs could achieve record-breaking results on complex datasets using purely supervised learning. On top of this, the performance was shown to be constrained by the amount of memory available on 2012 GPUs and the training time they were willing to tolerate. All of their experiments implied that the results could be improved even more simply by using faster GPUs, training longer, and using bigger datasets. This was a historic moment for the field of deep learning and for NVIDIA. So much so that support for deep learning developers became a core focus for NVIDIA. It would be mentioned at every keynote and product launch with a specific focus on promoting CUDA and getting it in the hands of developers. Over the following years, deep learning projects would achieve results superior to human capabilities in multiple fields: superhuman image recognition, voice recognition, chess play, Go play, self-driving, etc. Deep learning or artificial intelligence is already being used all around us. For example, it powers the recommendation algorithms and advertising optimization of many social media sites. Meta was early on this, using NVIDIA GPUs and deep learning techniques to improve Facebook and Instagram. Countless companies and researchers were using NVIDIA GPUs for deep learning. In a 2016 Forbes interview, Mark Andreessen of the renowned venture capital firm Andreessen Horowitz said, quote, "We've been investing in a lot of startups applying deep learning to many areas, and every single one effectively comes in the building on NVIDIA's platform." He adds that for fun, our firm has an internal game of what public companies we'd invest in if we were a hedge fund. We'd put all our money in NVIDIA, end quote. At that time, NVIDIA stock was trading around $10 a share. This was a profitable company with 56% gross margins and $1 billion in annual free cash flow. The free cash flow yield was 6.84%. The stock was only trading at 14.6 times annual free cash flow. Why? Well, the company just had a decade of no growth. They were thought of as a gaming graphics card company, since that's how they historically made their money. Little did Wall Street know the wild ride NVIDIA was about to go on. Outside of deep learning, there was another use case for NVIDIA's parallel computing GPUs developing. It turns out that they were perfect for crypto mining. Crypto mining is basically just solving extremely complex computational math problems. It turns out GPUs are a far more efficient way to solve these problems. As a result, crypto miners were buying up NVIDIA graphics cards to build crypto mining rigs. This got so extreme, eventually leading to massive data centers being built solely for that purpose. The problem for NVIDIA was that this revenue was being created in their gaming segment, and they were unable to determine what demand was from crypto and what was from gaming. People were just buying their graphics cards off the shelf. Their earnings suddenly became highly correlated to the crypto market. NVIDIA saw massive growth in the 2017 crypto bull market, crashing back down in 2019. Likewise, NVIDIA saw massive growth in the 2020 and 2021 crypto bull market, crashing back down after the 2022 crypto crash. The stock price largely followed the trend of earnings in this time, with large bull runs and crashes. It's important to note that the company still saw massive overall growth in that time. However, crypto was not going to be the long-term growth driver for NVIDIA. It was flashy, volatile, and got all the headlines, but it was not the main story. Crypto was more of a side quest and a distraction. Under the surface, NVIDIA was still growing that use case of deep learning and AI. This became obvious in fall 2022 when ChatGPT launched. It went mega viral, becoming the fastest product ever to reach 100 million users in just 2 months after launch. This brought the advancements of large language models and generative AI to the public consciousness. Immediately, the world realized how AI could be used to transform our modern economy. All of a sudden, skilled knowledge work has the possibility to be enhanced, accelerated, and in many cases, automated. Things like writing, art, animation, software development, music, and countless other fields can be generated through AI. I could go on for an hour just discussing all the current AI advancements, but that's not the point of this video. The takeaway is that it's going to transform, accelerate, and likely create trillion-dollar industries over the next few years and decades. Companies know that they need to invest heavily in AI or they risk the threat of disruption, especially the tech giants who are cash-rich and ready. Not only that, but it can just add value and increase productivity across a myriad of sectors. So once again, how do you train and run all these new AI applications? On parallel computing GPUs. Who's the leader here? NVIDIA. The amount of money pouring into this space is absurd. You have every hyperscale cloud provider making sure they have enough GPUs to meet current and future demand. That's Amazon Web Services, Microsoft Azure, Google Cloud, etc. They are spending billions because they view these as trillion-dollar businesses long term. Then you have companies with their own private clouds who want to buy GPUs. You got venture capital-backed startups buying GPUs, even sovereign wealth funds and governments buying GPUs to build training capacity. All this fueled the crazy quarter NVIDIA just posted with over $13 billion in revenue. So why did I just go through that whole history of deep learning and NVIDIA's influence in enabling it with their GPUs? Because it's important that you take it seriously. This is real, dramatic technological advancement. Give credit where credit is due. NVIDIA made the right bet and did important work. Now they are reaping the financial reward of being the first mover. Clap it up for NVIDIA. But remember, on this channel we are investors, so we look at the business financials and valuation, not just the story. So where is NVIDIA's business as of Q2 2023? Their largest business segment is the data center. Second quarter revenue was a record $10.32 billion, up 141% from the previous quarter and up 171% from a year ago. The data center is now the core of NVIDIA's business, making up 76.4% of total revenue. This is where all the growth is happening, as much of AI is being trained in the cloud. You have every major public cloud provider looking for new training capacity, along with hybrid and private clouds. This is no longer just GPUs either. NVIDIA now has full data center solutions, packaging multiple types of processors and networking together to try and make it as plug and play as possible. These solutions are more expensive and have higher gross margin for the company. NVIDIA's customers seem to be willing to pay any price to be able to get this training capacity as fast as possible. The growth of NVIDIA's data center segment is one of the most impressive business stories in recent history. Gaming is their second largest business segment. Second quarter revenue was $2.49 billion, up 11% from the prior quarter and up 22% year over year. Once their only business, gaming has now become a small but reliable piece of NVIDIA. Third, they have professional visualization. Second quarter revenue was $379 million, up 28% from the prior quarter and down 24% from a year ago. Finally, the company has their automotive segment. Second quarter revenue was $253 million, down 15% from the prior quarter and up 15% from a year ago. These last two segments might as well be a rounding error for the purposes of analyzing the stock. All of NVIDIA's growth story is the data center. So as we project out future earnings, it's important to think about who those end customers are and what their spending levels will be like in the future. Will it stay this high, continue to grow, or will it be a boom and bust cycle? We'll speculate on this later in the video. First, let's analyze NVIDIA's stock from the perspective of a long-term investor. To do so, I'll be using my stock research tool available at dividenddata.com. Here you have all the data to properly analyze the financials of over 7,500 stocks. There is a 14-day free trial, so try it out and follow along with me as I analyze NVIDIA stock. The NVIDIA Corporation, ticker symbol NVDA, has a current stock price of $416.10. With 2.47 billion shares outstanding, the market cap sits at just over $1 trillion. Here you can see the historic charts of stock price and non-GAAP earnings per share. The stock price has seen significant growth in 2023 following the 2022 crash. This has largely matched the trend of earnings, accelerating once the AI boom started becoming more clear. Now the company has given outlook for Q3 showing slightly more growth beyond this recent peak. Financially speaking, this earnings growth is fueled by a massive spike in revenue and an increase in margins. In Q2, NVIDIA posted over 70% gross margins, which is absurd for a hardware company. This is beyond the gross margins of luxury goods companies like LVMH. Q2 net margin was 45.81%. This led to big earnings for NVIDIA. The company posted operating cash flow of $6.3 billion in just the most recent quarter. Also, it's important to point out that NVIDIA is a fabless semiconductor company. This means they only design chips and software. They do not have to invest in expensive manufacturing capacity. Instead, they get their chips manufactured by TSMC. This makes NVIDIA far more capital efficient. In Q2, they only spent $289 million on capital expenditures. This gives them $6 billion in free cash flow. Why does this matter? Free cash flow is the most important metric to look at as an investor. It represents all the cash generated that can actually be returned to shareholders. It can be used to pay dividends, repurchase shares, or pay off debt. NVIDIA's efficient business model gives them an extremely high capacity to reward shareholders at their current earning power. As a point of comparison, Intel is a semiconductor company which designs and manufactures their own chips. This is far more capital intensive. They are spending $4 to $8 billion a quarter in capital expenditures. In recent years, this has eaten up their profits and pushed free cash flow negative. Shareholder value is declining. There is no money to reward shareholders unless you want to draw down from the balance sheet. So what is NVIDIA doing with all this cash they are generating? Well, they have a very small dividend that is basically a rounding error at this point. For context, just this quarter's free cash flow could pay the current dividend for over 15 years. NVIDIA has not shown any interest in raising the dividend at this time. However, they have shared that they will be rewarding shareholders in other ways. In fact, they just approved $25 billion in share repurchases, which will increase the relative ownership stake of all shareholders. They also seem to be paying off some debt as of the latest quarter. However, their existing debt is already very manageable. If we look at their balance sheet, they have $16 billion in cash on hand. With $10.7 billion in total debt, their net debt is negative $5.2 billion. NVIDIA is in a very strong financial position, especially when you consider they generated over $6 billion in free cash flow last quarter alone. Over the next few quarters, NVIDIA will likely stockpile cash, buy back shares, and look for new acquisition opportunities. So what is NVIDIA's valuation like relative to their current cash flows? Q2 free cash flow was $6 billion or $2.45 per share. If we annualize this amount, then that would be about $9.8 in annual free cash flow per share. That's a safe short-term estimate considering the company is projecting growth from that number in the upcoming quarter. With this estimate, NVIDIA is trading at roughly 40 times annual free cash flow. For most companies, that would be considered a rich multiple. However, that all comes down to how we expect earnings to perform over the long term. It's obvious NVIDIA will do very well and likely keep growing over the next few quarters, but it's not obvious how they will do after that. You have NVIDIA bulls who say this is just the beginning, in which case the stock may be undervalued at current prices. Then you have the more bearish case where earnings drop back down in a couple of years due to overspend based on hype or oversupply of compute relative to use. In that case, the stock would be dramatically overvalued and a bubble waiting to pop. So is this an overhyped earnings surge, or is it the start of a long-term trend? In preparation for this stock review video, I listened to many interviews from various commentators and analysts. I've compiled various perspectives from bullish to bearish sentiment. I'm going to break down the best points from these clips, ultimately building towards my own conclusion of whether or not NVIDIA stock is a bubble waiting to pop. First, I have a bullish case from Jim Liebenthal, an equity strategist that regularly appears on CNBC. In terms of his comments in this clip, I'd put him in the category of Wall Street trader who is jumping to the positive momentum around NVIDIA.
First off, I think you've heard me say for the last 2 weeks, I got to get in, I got to get a toehold before earnings, all right? I had no idea if earnings were going to be this good, and I had no idea how the stock would respond. So it wasn't a call on earnings, it was simply I have to participate before earnings. Look, I will admit I held my nose on valuation when I pulled the trigger. I'm not having such a hard time today after what I saw last night. This is a case where, the real world is showing us that NVIDIA has earnings power, demand for its chips that really there is no definition for. There appears to be no limit for. The demand is such that they can probably name any price that they want for these chips. Now, I can talk about valuation all I want, but this is a stock that's going higher. I don't care if it gives up today's gains. Today has no relevancy to the long-term prognosis for this stock. I, however, have a specific problem. Some people have it as well, that I wasn't in the stock, so how do I enter it? And it's a technique. You buy a little bit now. I'll see what happens over the next couple of days, but 1%, my position size now, is likely to be 4% over the next 6 months or so. I've just got to pick my spots and chip away at it. If you're listening to me and you're in the same boat, just patiently find your spots to build the position, but you have to own this stock.
Now, if you follow my channel, you would know that I find much of his logic here to be dangerous. When I hear someone say, I've I've got to get in, I held my nose on valuation, or you have to own this stock, it doesn't scream rational investing. The main point I'll agree with here is that it seems like right now, Nvidia could charge any price they want. This is true. Their pricing power is insane and the demand is overwhelming. So why am I sharing this clip if I think it's mostly faulty logic? Because you need to understand that this is how much of Wall Street is viewing Nvidia's stock. It's the hot stock of the year that you have to be in. However, that momentum is fleeting. As soon as there is any negative sentiment, these people are gone. Second, I have a clip from another analyst on CNBC who just raised his Nvidia stock price target to $600.
Really a blowout quarter. It exceeded even these elevated expectations. What was your biggest takeaway from the report? Have you changed your price target at all?
Yes, my price target went from 490 to 600. I mean, biggest takeaway is that it again, at this point, it seems like there is infinite demand for GPUs to build these large language models. And no matter how much NVIDIA ships, it just seems like there is a customer out there willing to take that incremental part that NVIDIA is putting out there.
Infinite demand. You don't hear those words very often, Matt. By the way, your new price target, just looking, implies that you see the stock moving 17% higher. So how does it move that 17%? What's the catalyst? As you can see, Jensen Huang putting out some very optimistic guidance for the current quarter. Where's that next leg of this rally coming from?
So I think it's really just them continuing to execute in terms of putting more product out there. So right now, my conversation suggests there's 40 weeks of lead time plus for their H100 product in certain channels. Other channels, it's a year plus. And so I'm being a bit facetious in saying infinite demand, but there is more demand than they can meet. And so for them, it's just ramping output. At some point, you do have to see these models turn into revenue for their customers. And so we have to see more use of AI, but we're not at that point. Right now, everyone is training these models.
As I've said, I agree that Nvidia has incredibly strong demand right now. This is important over the next few quarters and year. However, the best point was what he was alluding to at the end of the clip. He mentioned that the models trained on these GPUs need to eventually turn into revenue for Nvidia's customers. Ultimately, this is the crux of whether Nvidia's current earnings are sustainable. If Nvidia's customers are not getting a good ROI, then demand will decline. This would be a bubble-popping scenario for Nvidia stock. Many analysts have been comparing Nvidia's stock in the AI boom to the run-up of many stocks in the dot-com era. Of course, we all know how that ended. A big bubble with an even bigger pop. One of the most common comparisons online has been with Cisco, ticker symbol CSCO. From 1994 to 2000, Cisco grew revenue from $1.2 billion to just under $19 billion. It tripled from 1997 to 2000. This sent the stock from $8 to $80. However, after the dot-com crash, revenue flatlined for 3 years and earnings per share declined dramatically. This sent the stock all the way back down, wiping out its gains. Many accounts on X, formerly Twitter, have been bringing up Cisco as a point of comparison. So much so that even CNBC analysts have been asking guests about this concern.
I don't know if we can show literally like a 30-year stock chart of Cisco, but that company tripled its revenue from 1997 to 2000, from $6.5 billion to $19 billion, similar scope of what we're talking about here. The stock went up 10x, then revenue flatlined 2000 to 2003, and Cisco lost 70% of its value thereafter. We need to go back even further on that chart if we can. I don't know if we can show what was going on in the late 90s. I think that's as much as we can show. But so and I saw Dan Ives over at Wedbush making the comparison. There you can kind of see that it coming back down in the early 2000s. So when Ives is saying this is the 1995 moment, well, we all know the dot-com frenzy had two sides to the story. So it's already a $1.2 trillion market cap. There's the spike you can see in Cisco in the very late 90s as its revenue exploded. And what happens to investors who, while you're absolutely right about the fundamentals for NVIDIA, they don't want to get in another Cisco situation where they buy the stock at the peak of the excitement about the growth story.
Right. No, Kelly, it's a fair point. It's interesting. During those times, actually, I was working in the telecom industry, so I actually lived this firsthand. Now, what is different this time, and I know it's always risky to say it's different this time, is that a lot of the spenders at that time were the competitive local exchange carriers, but a lot of business plans, which in hindsight were not really fully baked. Look at who's driving the spending now. It's really strong, major US cloud players, right? Very well funded, multiple sources of CapEx to drive this, number one. And number two, it's enterprise. Enterprises have a lot of data that is just sitting there, right, with no ways of getting insight. So again, we call it AI, but what is AI at its heart? It's driving insight from a lot of data. So I think that is what is the big difference between what happened right back in the dot-com bubble, that the people driving the spending were very kind of, half-baked business plans, and the thinking was just build it and they will come. I think where we are today is there's a lot of money being spent by people who are a lot more thoughtful, who have a big base of revenues to draw from to drive this computing infrastructure. So I do think there are differences. And number two, what we have seen consistently is that in the technology industry, invariably the value shifts from the system makers towards silicon and software, right? And that is why we think that companies that are working at the semiconductor level have historically tended to have very extended ways of protecting their competitive moat.
I thought this Bank of America analyst brought up a good point here. First off, NVIDIA's customers are far higher quality and better capitalized than many were in the dot-com era. This is especially true when we talk about cloud providers like Microsoft and Amazon. Also, the various large enterprises who want to use these AI models. However, there is still a lot of venture capital money and startups adding to this demand as well. I suspect a large portion of those will suffer from poor business economics. Overall, though, I would not say that the current AI market is close to the bubble that the dot-com bubble was, at least so far in 2023. Even if NVIDIA demand falls from current levels, I doubt the stock will suffer the same dramatic fate as Cisco. I think it will be closer to the recent crypto crashes we've already seen. However, I'm not nearly as bullish as some analysts. Many argue that NVIDIA is cheap at current levels. In fact, Ben Reitz has just raised his one-year price target to $720. He does not think this NVIDIA earnings surge is a one-off.
So the bears will say that there could be over-ordering, that there's a lot of pull forward of this. And you actually make the point that they're trying to build a more durable stream of revenues, that they are looking to create this sort of ecosystem. Can you explain that? Because I feel like that is, the notion that it's a one-off, it'll sell its chip and it's done, is the pillar of the bear case at this point.
Yeah, I'm really glad you asked this question. Every once in a while, a special company comes along that's a platform. This is one of them. So there was Apple, there was Microsoft, but every once in a while, one of these comes along. It's very rare. And NVIDIA is probably the only company in semis that has the power to do this, to really be an end-to-end full-stack platform. What happens when you're successful doing that is you will generate an outsized proportion of the profits for that industry, and it's more durable than people think. Just look at Apple. A lot of people thought Apple would be cyclical. The multiple got really low, and obviously now it has almost a 30 PE. This company is probably one of those special companies. They're getting into software, cloud services, and they're generating a ton of cash now, so they're going to buy back stock, potentially like Apple can.
Can AMD not do that?
Not yet, no. They don't have the software moat. 15 to 20 years ago, NVIDIA made decisions around software that no one can touch. These were decisions made, decades ago. You can't just get into the market with a ported code. And this is, there's emulation. There's certain things that happen that developers take very seriously. And they're trained and they're used to NVIDIA, and they want to use it in the clouds and they want to use it for AI apps. You can't really just go in and take a big share. What likely does happen is that 80-20 rule, 90-10 rule, where there could be a second player, but I don't see their share, going below a dominant level. And I see them leading this market and enabling it, frankly.
I agree that NVIDIA has a software moat with its CUDA developer environment. This will lead to a durable competitive advantage in the AI market, and they will likely keep majority market share. However, I disagree with some of his points and think that he missed the root of the question. First, the comparison to Apple is ridiculous. It's such a different type of business. Apple monetizes their platform status through the App Store, services, etc. Right now, NVIDIA has absolutely none of that. He mentions that NVIDIA wants to be end-to-end to end and potentially offer their own cloud services. That may be a long-term desire of them, but right now it does not exist. If it did exist, then it would put the company in direct competition with all of their biggest customers. So if you're buying Nvidia stock today, I would not bet on this in terms of valuation. Also, he misses the main point of the CNBC host's question. How durable is Nvidia's current revenue? In my opinion, this has less to do with market share and more to do with whether or not demand will fall off from this massive surge. To answer that question, I'm going to share a clip from the All In podcast where they discussed the recent Nvidia earnings. By the way, I highly recommend that podcast and think it provides a lot of value.
Do you think we're going to be in a situation where the amount of capacity, compute being put online, is going to outstrip the need for that compute because software is getting so much better? And then maybe, people are running Hugging Face jobs and various LMs on the new silicon from Apple, and they're running it on their M2s. And so do we need this much capacity? Are there enough interesting jobs in the world for all this capacity? And then might that also be a headwind against NVIDIA when people say, you know what, I got enough capacity here?
I think the rational way to think about this is to try and calculate the efficient frontier on compute use. So the more compute you use, the more it costs you. The question then is, if you double the amount of compute you're using for a particular application, do you get twice the return on the investment? If you triple it, does your ROI on a percentage basis, go up or go down? So at some point, you reach an efficient frontier, which is you start to see a declining or negative rate of return on the investment in the compute that you're using for a particular application. And this is certainly going to be application and market specific. It's going to be largely driven by the data that is available in that market to do training, to do tuning, the market's appetite to spend money for that particular set of applications that emerges from that compute that's being used. And so we don't know today where the efficient frontier is across each of these different markets and sets of applications. And the market is finding that out. In the process of finding that out, everyone is spending a shit ton of money on compute. And they are trying to get as many server racks as they can. They are trying to get as many chipsets as they can. They're trying to get as much server time as they can. And everyone's got this idea that the more compute I can throw at a problem, the return is going to scale linearly. And it turns out that, like with most things, the answer is likely not. So we're at this point right now in, I would argue, a bit of a cycle that there looks to be a bubble. And what I mean by that is that there's a lot of inefficient spending going on as the efficient frontiers are discovered across all these different application sets. And so my intuition, without a lot of actual data to back this up, is that based just anecdotally on what I'm hearing people doing in the market, what companies are doing, what startups are doing, et cetera, everyone is throwing everything they can at compute, and they're going to realize that they're going to need to rationalize those expenses at some point. So I would envision NVIDIA is probably riding a little bit of a discovery of the efficient frontier wave right now, and that this probably is not necessarily steady state.
I think Friedberg is right that this is clearly a spike in demand that may not be sustainable. I mean, recall what happened here is that ChatGPT launched on November 30th last year and really caught everyone by surprise. It kind of took the world by storm. And over the next few months, you had hundreds of millions of users discover AI. I think it surprised even the OpenAI team. I think when they launched ChatGPT, they thought it'd be more of a proof of concept, but it ended up being a lot more than that. And so everyone has scrambled all of a sudden in the last 9 months or so to develop their own AI strategy. And so, again, it was this giant platform shift that happened overnight. So there is a tremendous GPU shortage right now. And that's also what's leading to these almost software-like profit margins by NVIDIA. Because when everyone's clamoring to get a limited supply of these chips and there just aren't enough, NVIDIA can almost charge whatever they want. And so I think even more than the demand, the profit margins might not be sustainable. But I think the reality is we just don't know what the steady state of demand in this market's going to be. I think we can say that it can't continue at these growth rates, but probably there will be some steady state of demand that's, it probably is at least where we are today.
This is the most important question when analyzing Nvidia's stock. It all comes down to where that efficient market spend lands. It's clear that it will remain high and slightly grow over the next few quarters. However, long term is the question. If it falls from current levels, then Nvidia's stock is a bubble waiting to pop. Beyond the demand question, there is still the risk of competition. Chamath discusses this on the All In podcast as well.
Is this peak NVIDIA, or is the peak yet to come?
Well, I think it's peak in one way, but this is less about a commentary on NVIDIA because they're clearly firing on all cylinders. But, it's a pretty well-established rule in capitalism, which is when the market observes that there's a company just printing enormous revenues and profits, they want to compete with them naturally to get their share of those revenues and profits. And that typically happens in all markets, then the result of that are just decaying margins. In the absence of a monopoly, this is what you should expect. And so because in this market, there's nothing really monopolistic about what they do. What they do is exceptional and good, but there are other ways and other systems and other companies that are developing chipsets and capabilities here to compete with NVIDIA. So it probably just motivates them even more and accelerates the path where you see competition. I tweeted this out yesterday, but one of the most interesting things that could happen is somebody like Tesla decides to either open source their chip or actually starts to sell their platform. Because if FSD gets to a reasonable level of scale, that entire platform system is a learning and inference system for the physical world. And I think that has tremendous applications.
Companies are going to work their asses off to reduce CapEx spend to NVIDIA or compete with NVIDIA outright. The Tesla cloud services for their AI training has been suggested and even mentioned by Elon. AMD is working on new GPUs focused on the data center for AI training. This is the same with Intel. Microsoft and Amazon are already investing in designing their own AI chips for their cloud services. Google already has their own chips with Google TPUs available on Google Cloud. Countless startups are now trying to compete. However, NVIDIA has such a lead in this space that I expect them to maintain majority market share at least over the next decade. So is NVIDIA stock a bubble waiting to pop? I think so. I would not consider buying the stock at current prices. That said, I would not sell the stock if I had bought it at much lower levels. I would say my views in terms of valuation overlap with the following CNBC guest known as the Dean of Valuation.
Now, my estimate, it's worth about $240 a share. But let's start with the good news. This is an amazing company. It's a company that's managed to find markets just ahead of growth and kind of dominate those markets. Gaming, crypto, AI. At this stage, you've got to view them as an opportunistic company, a company that manages to do this over and over again. It's not just lucky. I wouldn't buy them at today's price, but to the extent that you bought them a way back at the right price, and if you have them in your portfolio, I wouldn't argue with you if you said, I'm going to let the stock run.
Okay. What was the number you gave? 210 a share? Was that what you said?
240.
240. Okay. I guess that's better. So, but even 240 a share, that's like down almost 50% from here. So that's my challenge. I understand you say you wouldn't buy it here, but you seem to be saying even if it went down to 300 a share, people shouldn't buy it. Like, okay, you're good. You've had it for a long time. You're in the money. But what kinds of calculations can or should an investor who doesn't feel like they have enough NVIDIA use to justify buying it before it gets down to 240?
No, that's a good question. I think it really depends on how you see the AI craze playing out and how dominant you think NVIDIA will be in that space. The larger the potential AI market and the more likely it is that NVIDIA will dominate the market, the higher the number becomes. 240 becomes 280, becomes 320. And I think that's a judgment you've got to make. But this is a stock that's had near-death experiences. Sometimes companies, investors look at companies like NVIDIA and say, I could never buy a stock like this. It's so richly priced. This stock was $30 6 years ago. And it's had near-death experiences. It's dropped 50, 60, 80%. These are companies where if the momentum shifts, you can very quickly see a route in the other direction. You've seen this on Tesla. And I think you could see this in NVIDIA as well. So if you haven't been lucky enough to add NVIDIA yet, I think that there will be a point somewhere in the next year or two when fear is greatest. You will not feel comfortable buying NVIDIA at 150 because everybody's going to be fleeing. These same equity research analysts who put out buy recommendations with the stock it's 470 are quick to put out sell recommendations with the stock it's 150, which makes you wonder why bother with equity research in the first place. You will be buying in a moment of fear, but I think there will be moments with NVIDIA where it'll become a good investment again.
Over the next few quarters, I expect NVIDIA earnings will continue to improve and the stock price may rise from here. That said, I feel confident NVIDIA may be facing an overspend in demand and it could see a few years of low growth to outright earnings decline. In that case, the price is nearly guaranteed to crash. NVIDIA has had many 50% crashes in its history. All you have to do is look at 2022 when crypto demand washed up. However, over the very long term, NVIDIA likely has a strong growth story ahead. If you believe in the company, then that would be a good buying opportunity. At that time, all the momentum traders will be gone and these same analysts raising their price targets will be putting out sell ratings. Sadly, for those looking to buy NVIDIA stock, that point may be a few years away. Thank you for watching Dividend Data, and I hope you enjoyed this stock review video. Please leave a like and subscribe to the channel. Comment below if you want to see more stock review videos. If you want to use my stock research tool and portfolio tracker, then sign up at dividenddata.com. There is a 14-day free trial, so no risk in signing up. If the software helps you identify just one slightly better stock, then it pays for itself. Thanks for watching.